Hi everyone, it's Atuksha from Simple Crowdfunding, and today I'm here with Waqas from Meta Property Development, who is going to be talking to us about doing residential property. Waqas, thank you so much for joining us.
Hi, Atuksha. Thanks for having me.
So Waqas, why don't you tell us a little bit about yourself first and about Meta?
Sure. So I've been an entrepreneur for virtually the majority of my life, more focused on investments, but started my journey really in property when I was around 21, 22 years old. I was fortunate enough to have some really, really great mentors who pretty much cut my 15, 20-year journey into 5 years. So haven't done this by myself, just had some really good guidance along the way. So that was around 2004, 2005 when I started getting into property and really first got into the whole no money down thing that was happening back then. I mean, I know that happens still now, but back then, which I kind of refer to the golden age of property, it was a lot easier. You could buy property virtually even as an unemployed person, which I was, refinance and build a portfolio worth $1 million plus without any problems. Obviously that doesn't happen anymore, and then there's a lot of risks attached to that, but that's how I made my start. I bought about 17 properties in the matter of, I think, 9 or 10 months altogether when I was going through that phase. Wow. Realized I didn't want to be a landlord, sold it all, and then got into development, which also went well up until the 2008 crash, where property became a lot more difficult to do. Since then, I pivoted into financial investments in general. So we run a private hedge fund, which I started back in 2010, where we manage money on behalf of large family offices. I've always still been in property whilst I was building that business, more with my own money than anything else. But about 6-7 years ago, 2015, 2016, I started to get back into property with some JV partners and started to develop again.
And what type of properties does Meta develop? Give me some examples of the types of things that you do.
Sure. So I'll explain what Meta is in a second. In terms of what we do, which is essentially based on my previous track record over the last 15 years, we focus on buying well, adding value, and then either refinancing or selling on. So what does that look like? We could be looking at a Victorian house that we're converting into flats. That's really a bread and butter deal for us, which we do all around Northwest London and Southwest London, or even new builds. We're currently doing a project where we bought a semi-detached house in Southwest London. It had enough land to build a brand new house next to it and convert the existing house into 2 flats. So that's really our bread and butter that we're looking at. Whilst now, actually, what we're starting to do is move forward into larger deals where we're converting a house or building 5-6 flats at a time.
Right. And what makes Meta different to your competitors?
So Meta is really an extension of this track record that I've been building for the last 15 odd years. Historically, I really have used mainly JV partners to fund the projects. So we've got a JV partner on who has maybe anything from 300 to 500,000 pounds sitting in a bank account that's not doing anything else. And they usually come in as a 50-50 JV partner or a 60-40 split for us as a developer, where they put the money in and then we basically go and find a property and develop it out. And that works well. That's a great system, and it helps you build great relationships. What Meta really is, what we're finding and seeing is, well, in order for us to expand in a much larger way, we want to go out into the wider market and start taking money on from other investors outside the people that we knew. And when we started doing that, we started realizing that there's a lot of our competitors out there that actually aren't doing well by their clients. At the moment, the way I see it, the majority of people who want to invest anything from 5,000-10,000 pounds to 100,000 pounds and above really only have the options of, let's fund this one deal that one developer is doing, or let's fund this, or let's be part of this 15 million pound development that someone is doing. That middle path, really no one really services that properly. And that's why we set Meta up, as an extension of our track record. And what investors are investing into isn't necessarily a property project that we're doing. It's really a wider ecosystem. They're investing in us and us as a track record. And the value that we provide isn't just, Mr. Client, here you go, we found this deal, would you like to invest in it? No. One of our largest competitive advantages is that we have our own construction company.
Right.
For any developer, anyone that's in property in general that requires any kind of value add or work, everyone knows that the biggest unknown is the build. And we've experienced that even more so over the last 2 years. So what makes us different to our clients is not that we're asking our investors to invest into a project, we're asking the investors to invest into us.
Okay, and you touched upon the last couple of years. Obviously, the market conditions are very unusual at the moment. What are your thoughts with regards to what's going on with property in the market right now, and how has Meta accommodated for those?
So I think we are, and I think people say this all the time when difficult times come along, I think we're definitely living in unprecedented times. COVID was something no one really expected, no one really understood, no one really knew how to work with. And now the aftermath of COVID from a financial sense, and I've pretty much been saying this since when COVID started, is COVID is not the big problem. It's what's going to come afterwards that's going to actually be much, much bigger of an issue. Now, of course, the remnants of COVID have meant that material prices have gone up, supply chains have been disrupted, which meant and that's obviously added to the inflation problem that we have at the moment. But the challenge I have, and one of the reasons why we set up our own construction company in the middle of COVID, was I realized that a lot of people were being opportunistic. It's one thing when we're in difficult times or the economics are pointing in one direction. It's another thing when a builder turns up and asks for a 50 to 60% margin just because he doesn't know where the material prices are going. And that was really one of the drivers into us going and setting up our own shop from a construction company, is because we're in the kind of environment where you have to have control. If you don't have control, then you're putting yourself out there for costs to get completely out of whack. Not only your margin gets eroded, but you have more risk on the table than you probably fully understand yourself at the same time. I'll give you an example. We just finished a conversion of 2 flats in Northwest London. And I bought that property off of a developer who was actually going bust and just wanted to get rid of the property. He unfortunately didn't leave it in a very good state. And whilst we thought there was some structural work that needed to get done, what really happened is that we had to rebuild the entire back of the house.
Wow.
Now, if I had tendered that contract out and that decision wasn't actually made at the beginning of the contract, it was made in the middle of the contract, well, my contract just went up 50%, even more so, because a builder will hold me to ransom if he's that way inclined, or at least want to make sure he charges me for the inconvenience that's been caused. Whereas for us, it was like, okay, cool, well, the right thing to do is to rebuild the house and not just leave it in the shape that it's in and plasters on it. So we did it, and it actually cost us a little bit more money, but nowhere near what it would have. So I think, and I'm answering your question. I know it's a bit long, but in a property centric way, because that's what's relevant these days for anyone who's looking into property. I think it's difficult to see the wood from the trees at the moment. I think, no one knows where the next 4 or 5 years are going to be, but we all know that the next 2-3 years are going to be difficult. They're going to be difficult because interest rates have gone up, and that's going to scare people away. It's going to make it difficult for developers to fund their projects. It's going to make it difficult for developers to sell their projects. So overall, we're having that challenge to face in the midterm. However, I think in the long term, just like previous recessions and the financial crisis, I think in 4 or 5 years' time, we'll find that we're going to find ourselves back in the place where we were before. The market's going to need stimulation, and the rates will either flatten out or come down in order to stimulate the market again.
So with regards to what's going on in the current market, do you see any opportunities for Meta?
Yes, and when I answer this question, it's always difficult to answer that question without sounding like an opportunist. But the bad times is where the best deals are made. And we all know that. It's a cliche for anyone who's read any property book in the past, but it's the truth. You know, a lot of people don't like uncertainty. Most people don't like uncertainty. We welcome it, and we plan for it. You know, Meta is ready for the next 2-3 years, and actually probably looking forward to the next 2-3 years, because we're ready from a cash perspective. We know how to buy. You know, the biggest mistake that people make is they think that it's the build that's the most valuable thing. No, the build is the most risky thing, but the most valuable thing is buying well.
Yeah.
You know, and Meta's philosophy, which has been my philosophy for the last 15 years, is I make my money on purchase, not on sale. So with that philosophy, as long as we buy well and our vertical integration has taken into account all of the risk associated with a build, which we can also eliminate, well, that just leaves the risk of it costing a bit too much from a financing perspective, or it takes longer to exit because we need to find more. It requires more time to find a buyer. So if you think of that from a vertical, you know, from a process perspective, we've actually minimized risks as long as we make the right decisions upfront.
Yeah, and by having a construction company, you can also then control those additional costs that are required.
Correct.
So whereas others might then not be able to make the project work, you will find a way to be able to make it work. Would that be fair?
Absolutely. And I think, you know, no construction project is ever on budget and is ever on time, right? So either you give yourself a very nice buffer, which is a nice surprise afterwards if you don't have to use it, or you realize that something is going to take a lot longer. You know, so if you think you're going to finish something in 6 months, I'm budgeting 9, just to be on the safe side, because then you can make accurate decisions at that point in time, because you know, okay, if it's done quicker, I'm ahead of schedule, but actually I've given myself plenty of time to make sure I finish it. And the other thing is, you know, nothing ever goes the way it should. Like I'll give you another example. I mentioned the house that we bought in Southwest London, where we're building a new house next to it. Well, we knew that that there was a main sewage line passing through the houses at the back, which wasn't actually an issue because it was far enough from where we were constructing, and the planning permission had made sure of that. But as we started digging the foundations, we found a manhole exactly where our foundations is supposed to be. Now, if the average person finds that manhole, that's 2-3 weeks, maybe even a month wiped out. They're like, okay, cool. Now I have to go back to the architect, or I have to go back to this, or I have to, and the builder now can't do anything. So he's sitting there charging an excess because he can't make any of his workers do anything at that point in time. So the benefit of having our ecosystem, the way that we have established it with the construction company and our professional services as well, is that actually we managed to sort that out in 2 days. You know, we were on the call with the architect right away. He knew exactly what he came to site that day. Our builders knew what they were doing, and it was just a very simple process to find a solution to that very, very quickly. And that's why I think, again, we're ready for what's coming, and why the construction company is of incredible importance to our success.
Absolutely, that makes a lot of sense. So Waqas, why have you decided to raise through Crowd and through Simple?
Atuksha, so I think it really presents a win-win situation for us to go with crowdfunding, and Simple in particular. And I say that because it gives the average person the ability to invest into what we do, which otherwise would not be possible. You know, it's easy for someone who has a significant amount of money to invest into what we do, but you know, the average person who's looking to invest their money and make a good return while still, you know, being compliant, which is the second reason why I think it was important for us to in particular go with Simple, is we wanted to raise the money compliantly. There's been our industry and taking on other people's money, we take that responsibility seriously. So in particular with the way the environment has been and what other companies and competitors have done in the past few years, we wanted to make sure that when a client comes to us, every box is ticked. So compliance is really, really important to us. We wanted to make sure that we did it the right way. And then also, it also gives us the ability to reach people that otherwise wouldn't be able to invest into us. you're not just talking individuals that have smaller amounts to invest, but also ISAs or SaaS investors. That is a large community of investors that are looking for a great place to put their funds, and Simple and Crowd allows to do that. And also, if I may add a fourth one, if I'm thinking about it, I believe that crowdfunding isn't even anywhere near the maturity as an industry in terms of where I think the industry is going. So getting in now actually is advantageous for us, because we'll have a footing in that industry as well.
So Waqas, with regards to the projects that you do, what are normally what are the standard exits? So do you sell? Do you hold? What happens?
I'm a firm believer in keeping exits open. So I will never, I'll have a preferred exit for each of the properties when we first get into it, but I won't be opposed to looking at other exits as well. And that actually isn't just sell or rent, as most people will think it's sell and rent, but actually sell and rent have their own individual exit strategies, right?
Yeah.
You can sell on the open market, you can sell on auctions, you can sell to an investor, you can have an end user be part of the journey early on. So, for example, we've worked with clients before who have been looking for a house in a particular area, and we're doing the development of one already. And we say, I know this sounds complicated, but why don't you come in, pick the bathrooms that you want, pick the kitchen that you want, and see if you want to part develop this, and we'll sell the property on earlier, or exchange the property earlier based on those conditions that we must fulfill. So I think these days it's not as easy as saying let's either rent or refinance and hold or sell. I think you need to be a little bit more creative.
Yeah, that's fair enough. And in terms of Meta and growth, what are your growth plans? What are you looking to achieve, say, in the next 3 to 5 years?
So for me, what's important is sustainability. If I cannot sustain growth to a degree organically, I'm not interested. So I'm not going to sit here and say to you, look, Atuksha, if everything goes well, I want to raise 10 million in the next 3 to 5 years. Well, I have to be able to service that 10 million. I think a lot of people get ahead of themselves to raise a hell of a lot of money and then can't service that money, which we know is also a cause of a lot of our competitors not being able to fulfill their commitments to their investors. So our view is we're going to be aiming to raise 2 to 3 million. I think that's where I'll stop for the time being. Maybe pause there for 6 months to a year, because the important part here is to understand that this, we're not just, like I said, your investors aren't just investing into a project, they're investing into the ecosystem. So if I all of a sudden grow the ecosystem over here that much and that's not catching up, well, it's gonna be imbalanced. So for us, what's important is that the construction company itself, as well as the capital raising side, as well as the operational side of the business, grow sustainably together. I'm sure at some point in time we'll be able to handle 10 to 50 million pounds worth of investments. I don't doubt that for a second. But for me, what's important is how does that look in line with growing the ecosystem that I depend upon, that our investors depend upon, to make sure that we're managing the risk properly.
If anything was possible, what would, how many units would you want to be sort of managing, say, in a year, or converting or bringing to life in a year?
So I think the next milestone for me, and ideal is an interesting word to use, but the next milestone for me really is that we are easily managing 5 large bills, which means we're taking anything from a purchase price from $1.5 million to 2 million, converting that house into 4 or 5 flats, or similar, doing an extension and a new build, or a new build itself. If the construction company can build its processes sustainably to be able to manage 5 of those, which would easily warrant a 3 million pound, 4 million pound raise, then I know I can build on those foundations. So if I can achieve that as an ideal circumstance, then the rest of it becomes much, much easier to do.
Perfect. And in terms of the types of, so we are talking about bringing arrays to market, so with you, which is great. And in terms of the types of projects, we have touched upon this already, but so it could be refurbishments, it could be conversions, it could be new builds. It's a variety. It's whatever comes to market for you.
Correct.
Is that correct?
Yeah, we will always favor conversion. So we will always favor increasing dwellings. For the simple reason that increasing dwellings usually means we're making things more we're making things more affordable. You know, a lot less people can afford £1.5 million house or £2 million house than they can a £500,000 flat. Plus the economics on going and building more dwellings or a new build are better because of strategic advantages like VAT, lowered VAT rates. That plays a big role and is actually quite helpful from that perspective, right? The reason why, you know, a lot of average people don't know that, the average investor doesn't know that, but the reason why a lot of developers love new builds is because it's zero rated VAT. So they're saving significant cost on that and can manage the cash flow much better that way as well. So for us, yes, we're solely focusing on anything to add value on. It'd be very rare that we're just taking something to refurbish unless it's got a significant margin, unless I pick a shell up in auction for a fifth or a fourth of the price that I should.
Yeah, okay, that makes sense. And we'll obviously be sharing more information as it becomes available for you anyway. Are you actively still looking for sites? So if someone wanted to or has sites available, would it make sense for them to reach out to you?
Absolutely. We always have either a raise going on or a JV partner ready to deploy funds. So we're always definitely looking for the right kind of deal.
Okay, that's perfect. Is there anything else that you want to add before?
No, honestly, I just want to say thank you to you for giving me the opportunity to speak about Meta and what we do over here. I think if I could leave anyone listening to this, if I could leave a message for anyone listening to this, it would be, we pride ourselves on being transparent and open, and regardless of whether you're investing £5,000 or £100,000, you're always welcome to give us a call. You're always welcome to come to the site that you've invested into. We want to make sure that this isn't just, you know, whoever wants to be an armchair investor can be an armchair investor. But if you do want to come and see where your money has gone, I'd like to meet you. It makes it much easier to build a relationship, and also it makes it much easier for you to trust someone when you see them in person. So for anyone that is interested in what they're doing, in what we're doing, and looking to invest into what we're doing, doors always open, and we prefer that, in fact, for you to come and meet us.
Perfect. Thank you so much. I really appreciate your time, Waqas.
Thanks, Atuksha. Take care. Have a good day.
Thanks.